This is your investment update for May 2019. A pretty tough month for stock prices. The S&P 500 closed down 6.4% for the month. So a pretty volatile downside month to the market, particularly kind of in the mid to late part of the month. International stocks were down 5.8 as well. And then we had a rally in bonds subsequent to that. You had domestic bond markets up 1.8% and global bond markets up 1.4%. And you have the 10-year Treasury closing the month right around 2.12%. So quite a rally in yields there. What we have here is what we've kind of been talking about in previous videos, where we would expect some volatility to pick up, particularly surrounding the trade issues with China. That's starting to show up in some economic data that's been coming out, where we've seen kind of some softness in some labor and some export data. And that's to be expected whenever you start throwing tariffs on things. It's going to have some ripple effects. And what that's also caused is the Federal Reserve to come out and start speaking towards that trade war. They issued some statements. The Fed President Jerome Powell last week hinted that the Fed could cut rates if the trade war started to really affect the markets and the economy. And then James Bullard came out on Monday of this week and said that on top of that, he believes rates may be inappropriately high already. So what we've been talking about with interest rates, it looked like that the Fed had changed stances and that the next cut, move was down. That looks like that's going to be accurate. And what that tells you is the market, that was probably what caused a lot of the market activity in the beginning of the year. We had this huge surge in the market right after the Fed came out and said that they were going to probably start cutting rates. That's probably the market pricing in easier policy. And now that we've kind of gotten to the end of that, we're starting to see some volatility surrounding the uncertainty about what's going to happen in the near to intermediate term. And we would expect that volatility to stick around for a while.